All right, hey everybody, TG here. Sorry about the delay. Restream was acting up for some strange reason, not sure why or whatever, but sometimes you do the same thing every day and the computers want to do something different. So that is what we have. All right, so it looks like we are good. And let me double check a couple things and we'll do this. Take that little thing off. That's my little privacy screen. Hopefully everybody's doing well out there today. And yeah, so let's see. Wednesday, happy Wednesday. It is the 23rd of August. And if you guys have any questions or comments, be sure to share them on the Facebook and YouTube. So that should work. And then we are also live in the Moxie room. So we'll see you guys here. And then also I'm going to be in the options room and the Moxie room at 9:30 my time, so 11:30 Central. And we'll kind of go through there. But I want to make sure everybody knows about coming over to Profit Pilot as far as the I keep wanting to say Twitter, but I guess we say X, which doesn't really. It's funny because I don't think Elon Musk is a terrible person or anything else like that, but it's unfortunate. I think that he switched this thing to X. It just doesn't quite roll off the tongue, and I don't know. Twitter. We had so many different words and acronyms about it in order to say, there's a tweet and post something. So I don't know what we say now. Has anybody figured that out yet? I know there are some people who have been trying to wonder and question that and say like, oh, I just posted an X, and that doesn't make sense either. So yeah, it's kind of weird. I wish they would kind of change it back. All right. So the other thing we'll kind of talk about is I do every 3 weeks I do kind of like a radio spot basically, and it's on the KE report. And you can see it here. I just posted it yesterday. We had a good long chat with them. I really like the guys that do it. We've been doing this now for, gosh, I think probably 2 years. And so we've really gotten to know each other. And so they kind of know what kind of questions to ask. They know my trading style. And it's been fun talking to them. And you guys can maybe get a little sense of a different picture than what I talk about sometimes because, they ask me different questions. So you can click on that and listen to what we have to say. All right, let's come over here to the SPY. And just remember, if you guys have any questions, you can comment on the Facebook or YouTube. All right, the other thing is, I think Friday was a capitulation day. And this is something, I forgot my light too. This is something that I was talking to my subscribers about. And I'd say so far that's what we're getting. So it took a couple days for it to really manifest. But after 3 weeks of going straight down, no bounces. And that was kind of it's not odd. It's just rare to have the market do what it did. In fact, I was watching a video of another friend of mine who's older than me. He does this professionally. And so, I like to look up to him. And he was saying the same thing in his videos. Like he was expecting price to come down to the daily 50, bounce and see if we continue, or it was going to come down to the 50, bounce a little bit, and then continue down if it needed to go further. And I'm totally in agreement with that, which is crazy why we didn't get any, maybe like 1 day or half a day of a bounce off of the daily 50. I mean, this thing was a pretty big downdraft. The other thing I talk about is usually there's some sort of bounce even up here around the 21 EMA, and we really didn't even get that. This market just, you can see here when it got the Fitch downgrade news, it just let the air out, which is funny because we were starting to expect a pullback. Oh, I think it was the FOMC right before Fitch. So you can see right there's the Moxie price trigger. And you can see, I think that was actually Bank of Japan news that happened right there. So I was kind of thinking that was going to be the short. We were going to start going short right there, or the pullback was going to start right there. And nope, it came right back up and took another couple days for the market to really just say, okay, well, what's the next shoe to drop? And this is what I always say. It's I find it very interesting. The market is just fascinating, absolutely fascinating. It's like which came first, the chicken or the egg? Because you look at the charts here, and with the Moxie indicator and my other indicators and how I teach trading and looking at this kind of stuff, we could look at this and say, yeah, this thing was getting pretty overbought. It was getting long in the tooth, basically. And we could see here that we had the Moxie price trigger and everything else like that. It's like, okay, we should be pulling back. And the breadth, the internals, the number of stocks over their 50-day SMA were all extreme, like over 80%, getting 85%, and then finally peaked out at 89%. And we just kind of like, okay, when is this like? How long is this thing gonna last? And so the market, the technicals were saying you should definitely expect a pullback. We don't know what it's going to look like, but we should definitely expect a pullback. And then the market was just kind of like, okay, I'm ready to do what I need to do, but I'm looking around and like, what is the catalyst that's going to make this happen? And it wasn't the Bank of Japan, it wasn't the FOMC. Apparently, it was Fitch, the Fitch downgrade, and that is what the market used as its excuse, basically. Let's see. Do I think we will see a pullback on the day? You want to go down to 440? Um, mm, well, I wouldn't want to be. Let me put it this way, Jay. Is I'm not sure I would want to be banking on a short play for something that has been moving like this. Okay. First off, the the more immediate trend is up, and that is because the market has been. Let me reload this because glitching on me. But the more immediate trend is up because it got so oversold going into 3 weeks of going down, and then finally we had that capitulation on Friday, and now we're moving back up. I would not really want to go against this. Okay, you can see that there's a channel, and you can see how price has been going up. Now maybe that's why you're looking at that channel and saying, okay, there's a pullback, but that's kind of a tough thing to want to do. If this is a short squeeze, then this isn't going to stop until the shorts are squeezed out and then it might pull back. But that's a tough thing to want to play. You should go with the trend. Okay, so if you're looking for this like if you wanted the primary trend, you should be going up today. You should have been long, not trying to short this and hope that it goes down to 440. Okay, I think that's going to be fairly rough because the other thing is timing. Is it going to happen today? Well, if you look at the previous time, you can see that when it finally took off, you know, it did eventually pull back to the 5-minute 50, but it happened the next day. So I don't know what your time frame is or kind of what you're looking for. Maybe you can elaborate a little bit if you want. But that's kind of what I'm looking at. The other thing is that even if it stops going up, what if it just goes sideways? So that's another reason why I wouldn't want to be trying to look for a pullback on a day that is kind of fairly strong. In fact, let's look at the internals. Not terribly strong, but they are bullish. You can see it is bullish, and we finally have the order flow positive, and in fact, we have the advanced decline is quite strong. So the advanced decline is there. That's where the strength is coming from, and you can see we've been putting in higher lows as far as the advanced decline. So yeah, not a day that I would want to be trying to short things or trying to play for a pullback. I'll just reiterate that even if price runs up into resistance, that doesn't mean it has to come down. It could just go sideways. So yeah, hopefully that kind of helps you as far as what you're looking for in timing. Now, those of you in the Moxie room, we'll go more in depth about this when I'm in the options room and the Moxie room and all that kind of stuff in about an hour or so. But what do we see right here? Right there. There's your confirmation on the 15-minute time frame. That is exactly what we're looking for. I posted this to you guys yesterday. I said, this is what I'm looking for. And today we are getting that confirmation. And what did we also say? 50, 200, 50 maneuver. In fact, I need to do better about kind of writing an agenda for some of my sessions. And so I think this is what I'm going to talk about. We'll do SPY 15-minute 50. And then we'll also talk about SPY 15-minute 50, 200. Do all this, right? Trying to talk and type at the same time. It can be a little bit challenging. Yeah, so that's we'll kind of fill out some of the things I'll be talking about a little bit more in depth. We'll also talk about some oil and all that. Okay, cool, Jay. So yeah, nice that you made money on the way up, looking for the next trade. Yeah, I don't think 440 is in the cards as far as even a pullback. If you're looking for the next trade, that's probably not a level that I would be looking at. That seems like it's pretty far down there. Yeah. And in fact, near term, yeah, let me put it this way. If you wanted to go long here, I would wait for some sort of pullback, but I would be concerned thinking that there could be much more. Because this is already pretty extended. This was a kind of a straight up day. It is getting away from the 2-minute 50. I would say look for the 2-minute 50 kind of to be the next area of support, probably the 5-minute 21 to be the next area of support, and the 15-minute 8 EMA to be the next area of support. And if it can hold it and bounce off of it, great. you've got a long trade in that case. If it can't hold it, then that's when you start getting into the chop, or it's going to move down and cycle back down. I would say, for today, it's kind of getting a little bit up there, but yeah, we'll see how far it can go. But I'm not a huge day trader, mostly because I can see the bigger picture, but some of these intraday stuff, having to watch it all day, and it's kind of tough for me. I get anxious. I like to be able to just look at something kind of once a day and see how it is. All right. So let's see, what else you guys got going on out there? Let's show you some oil. And hopefully everyone's doing okay with any of their oil trades if that is the case. But what I can show you is the Moxie indicator with the Moxie rules told us that you need to be extremely careful, and if not, don't do it at all, about oil on the long side right here. In fact, I called this on Monday in the options room. So we're going to go back and talk to them about this and say, just want to make sure you guys were aware of this. But look what happened. We had price run right into the underside of a downtrending hourly 50 with the Moxie indicator significantly below zero. That is a perfect continuation trade to the downside. Just like that would be a perfect continuation trade to the upside. See how price ran into an uptrending hourly 50 with the Moxie indicator above zero? So same thing, just upside down. Just reverse it. Just flip it and reverse it. The other thing we can talk about is this formation. This is basically what I call an inverse elf shoe. And that's another thing that we're going to be going into the options room and the Moxie room and diving a little bit deeper for the subscribers there to say, hey, we talked about this on Monday. I made a video over the weekend that showed a lot of these kind of patterns with the whole market was pulling back over the last 3 weeks, and that there are some consistent principles in through here that I'd like to show you guys and tell you how to work with it. The other thing, as far as a near-term thing, yeah, there was a little bit of a bounce right there, but overall, what was the direction of the 15-minute 50? It was down. So that was another thing to kind of help tell you, like, look, this thing wasn't going to be working out to the upside anytime soon. You can even see just from yesterday, I mean, even yesterday, look at that, right into the underside of a downtrending 15-minute 50 with also the 15-minute 200 in a downtrend. Les, nice. Way to stay on topic. Thank you. PR. Well, let's see, what is this thing? Permian. Okay. Let's. I always like to look at the higher time frames, get a little bit of context. Seems like it hasn't been around for very long. Just of note, and we don't, it's hard to say because it's a monthly time frame, how much effect it's going to have, but you can see here that price is running into the underside of the monthly 50 SMA. It could be a potential resistance at the time, just like you could see here how price got held up at the monthly 10 and then managed to get through it and then use the monthly 10 for support. So this is why I like to use some of these moving averages, is for that reason. You can see support and resistance right there pretty perfectly, even on a monthly time frame. And then let's see, on the weekly, I'll also bring your attention to the weekly third ATR. Okay, so that's another thing. Les, I know you've kind of been around for a little while, that you see me talk about that all the time. It just means be careful up there. We've seen recently with, when we had our run from end of May to the end of July, we saw a lot of names run up to their weekly third ATR. They maybe either reversed immediately right there, or they kind of carried for a little bit, but then eventually came back down. So the third ATR is kind of this outer boundary situation, and especially on a weekly chart. Now, of course, it can stay up here, it can push a little bit further, but it just means it's kind of up at an outer area, and it might be running out of steam a little bit, or at least you use more caution. Maybe don't load the boat long up there, and maybe kind of take a little bit of risk off the table because it's already had a good move. That I would also reiterate that for the daily chart, daily and hourly. It's the same kind of thing. This has done a really good job. This has been in a trend for quite some time, which is fantastic. But now look what we're doing. You're right up there and you're punching outside of that third ATR. So yeah, that's That's an area where you want to have some caution, maybe take a little bit off. I would never want to initiate a trade up there. This thing has already moved for a very long time, had a great move, and it's at the daily 30 ATR and the weekly 30 ATR. I would never want to initiate a trade up there, a long trade. Now, maybe the other question is, do you want to short it? I wouldn't do that either. It's an uptrend. I don't really want to play a pullback. Like, I don't want to go that way. That would be a counter trend trade. It's kind of like this. You can see here how you could have theoretically shorted it, and yes, it would have moved. But if you weren't Johnny on the spot, you can see that it immediately bounced back, flagged, and then went up. And so really that's a counter trend trade. Yeah, Les, nice. So you're 9.7. That's a great trade. Fantastic. Look at that. That's really, really great. You can see here how price got up over the daily 50, then pulled back into the daily 50. So that was great. And you can see the 8 was over the 21 the whole time. The Moxie indicator was a little late, but it showed up right there. So not too bad, because even if you got in here, you can see that there was another opportunity basically in the same spot. So yeah, right there, pretty good. And the Moxie indicator would have called your attention to it. So yeah, it looks like you got it as it pulled back into the daily 50. So good job for that one. Let's see if we can show that on the weekly 950 or so. Okay, yeah, Les, look at this. You also got it right when the weekly 8 was getting over, the weekly 8 was crossing over the weekly 21, and price was getting over the weekly 30. So that's another kind of good conjunction area. So yeah, looked nice. And then as far as anything else, I don't see too much yet on the hourly chart. It's still up, the Moxie indicator is still up. All that's fine and fantastic, but it's just the context of that monthly and weekly. Yeah, I'd be a little bit careful up there. At least cash some chips in, take some risk off the table, that kind of stuff. Uziel, it's a very vague question. You gotta give me a little bit more guidance when you just say, "Hey man, what will the spy do?" That's really tough to just answer. Okay, you exited, so Les, back to PR. You exited at 11.9. Well, let's see. What was your reason? What was your reason? Because I'm assuming did you that wasn't quite 11.9 there, so it must have been somewhere over here, probably right after earnings. So 11.9-ish right there. Well, was it because of the double top right there? That seems like that might have been a reason that you got out. Yeah, double top. You look, it's always great to cash in green tickets. I will put it that way, okay? So never be too mad that you're like, oh darn, I made money. Okay. In this field of what we do and how tricky this can be, if you're cashing in green tickets, just be happy about that. That's number one. And number two, if you want to do better, then yeah, you kind of go back and you look and say, okay, well, what was the issue? I would say I don't know how you feel about earnings, but I would kind of say that you held through earnings and it worked. Hey, keep going. If it wasn't a disaster and it's going your direction, then okay. If you were willing to hang on through that kind of risk, then maybe you should be willing to hang on a little bit further. And if you can see here, there really wasn't any reason to exit. The daily chart still had plenty of room above, like it wasn't getting overbought. It wasn't hitting the 30 ATR. It wasn't running away from even the 8 EMA. There was really nothing on the daily chart that said that there's a problem. And on the hourly chart, it was kind of the same thing. Yes, it was kind of hitting that 30 ATR, but really the 8 was over the 21, price was over the 50. The 50 was in a good uptrend. And honestly, the Moxie indicator was, doing okay. So I think for something like this, and I know it's tough, and this is one of those things that you kind of have to practice. If you are in a decent trade, and maybe a way to make you feel better, maybe what you could do next time is take half off, or take a third off, or take a quarter, like whatever you want to do. Cash them in at a double top. That way, if it does turn around, you're not too skittish because you don't have a full load on this thing. You've at least cashed them in. And now you can kind of let the rest of it go because you're like, hey, it's a free trade at this point. And so that'll give you a little bit of more peace of mind to allow it to go up, if it's going to do that. And then, yeah, there just weren't any real signals that said this thing was going to roll over. And so that's the next thing to kind of practice is stay in a trade until it tells you that you shouldn't be in it. And I know that might be tricky. I tend to actually like to just get out at the top. But a lot of times you'll see when price actually starts to roll over. And like I showed you with oil, for example, oil, and Now that I'm connecting the dots here, you might have gotten a little bit, well, maybe not even really, because when was PR? Let me go back to that. PR hit 11.9 on 8.7, and USO 8.7. Where was that? Look, 8.7. Yeah, not too bad. I could see that. Okay, so maybe what you were thinking is like, hey, if oil is going to roll over, then PR is going to roll over too, because oil was getting extended and all that kind of stuff. Yes, but at 8.7, oil was still moving up. You had the Moxie price trigger hadn't quite fired, and oil hadn't broken the hourly 50 yet, and it hadn't even gotten stuck underneath the hourly 50 yet. So if you were using oil as your kind of market gauge for your PR trade, I think you could have gone a little bit further. And really, if you get skittish, just take some off. Just reduce your position size, put some money in the bank, and now you can let the thing go and experiment and see how it feels for you. Market sell-off triggered it. Okay. Yeah, well, oil was not selling off. I'll tell you that. Let's see. Go back to PR, and actually the market sell-off, that's the market top. Let me get back over to SPY on this one. I'll look. The market top, I see. Huh. Okay. Yeah. You know what? Here's another thing to look at. You need to look at which stocks care and which stocks don't care. Because let me show you COUR. Look at this. Does COUR care that the market pulled back? Does it even know that the market pulled back? The top of the market was right here. The SPY topped and started to drop right as COUR popped up on earnings. Now, of course, I would not want to chase this at that upper third ATR, but if you look at this, as you start letting it pull back and come into some support, look at this thing go. This is one of those things where you look at this stock and say, hey, it does not care that the market's pulling back, which means if it's just going sideways while the market is melting down, what do you think it's going to do when the market stops melting down? It's probably going to go up. So that would be something where for your PR trade, I get it, the top of the market was right there. you This is funny, as I keep seeing this and I keep thinking things. Not only did you hold on to this thing through earnings, and then you held on to this thing. Let me see, where again is the top. Looking at my other. This was the Fitch day. This was Fitch right there. So you held on to this even longer because you then sold it off at 11.9, which was after that. So you held on through earnings, you held on through the Fitch downgrade, and this thing continued to stay up and continue to basically hold strong even though the market was melting down. You got to look at your individual stocks and say, hey, maybe this thing's okay. And if you are skittish about what's going on with the market, which totally makes sense, take half off. Take a third, take a quarter, take half off, take something off so that you can sleep at night and you can say, look, I made a great trade. I put that money in the bank. Now I have a smaller position. I can kind of just let this go and see where it is. And then you can also look and say, you know what? Wow, this thing's actually holding up pretty well considering the rest of the market. So maybe I'll just see where this goes. And nothing actually really said that it was overbought. It wasn't overbought. Now maybe up here, this I would say is starting to get into an area where it could be overbought. Les, have you ever heard of a blow off top? That might be what this is, because you can see here it's kind of trucking along, and then look at that. Suddenly it goes vertical, and that could kind of be where it goes up there, rings the bell, and then comes back down. Let's see. All right, so kind of enough on that. So Les, thank you. That was a lot of material to talk about and discuss. So thanks for the question. All right, Jay, let's see. I know people who trade every stock. How do you focus on what you will consistently trade? I think number one, that question makes me think about day trading, because when you have 1,000 stocks to choose from, how do you know which one to trade from and which one's going to move? That's part of why I always found that to be a little bit difficult. But what I will say is for day traders, they tend to stick with the bigger stocks. Of course, there are people who trade the micro caps and this and that, and they day trade those crazy things too. But if you're going to be doing options or if you're going to be day trading, you most likely need something that has a lot of liquidity. Because if you're going to be putting a lot of money in and out within minutes or hours, you need something that can handle that and doesn't have as much slippage, doesn't have a wide spread, and all those kind of things. And so I think that's how you just start even choosing a stock that can do that. The other thing is, I think you look at a stock that behaves the way that works well for you. There are some stocks out there, and I'm trying to think if I can think of one. Maybe Bohr. So Bohr is oil related. I've wanted to trade this stock because I know I could tell it was going to go up, but it's so kind of erratic that I just stay away from it. I know that this thing is not good for my psyche because it doesn't move in ways that I am comfortable riding through or being able to, have a predict basically or have an educated guess about. So I could see it was going up, but man, those intraday moves, like, what am I going to do? Ride through some of that stuff or, it's just, this is not a stock that behaves well for me and my mind and how I trade. So if you found a stock that was like a day trading stock and it did this, then maybe that didn't work for you. You need to find something that behaves the way you need it to behave, or treats your indicators well. Because I know some stocks the Moxie indicator is absolutely useless on because it's just so neurotic. So that's one way to do it. And then for me, I tend to, well, yeah, I like things that have a certain look, a certain feel. They move well, and then that I can kind of rely on whether they follow my rules or not. That's why I choose them. There are other parameters you can say volume. For me, since I run a trading room, I need to make sure that my subscribers can follow me in. It got real bad in 2020. Everyone was on board and everyone was trading from home. So we had a bunch of people in the room, and I had to make sure that I was trading stocks no less than 1 million shares per day because we got what people started calling the Moxie bump. I'd put on a trade and tell people about it, and we could actually see volume spike and we could see the stock actually move. And um, it was causing problems for our traders. So I was like, okay, we got to get into bigger, more liquid stocks in that case. Less of a problem now. The whole market's kind of changed. So I now at least need something over 500,000 shares per day. And yeah, then you kind of just decide, well, what's the sector? I know for me, oil doesn't work well. Even if I'm looking at names like Rig, there are opportunities and they have some moves and I can call these things out. But for the most part, even trading Rig doesn't work for me. I mean, look at this. This is something I don't want to trade. I do not want to be stepping into that. So oil doesn't work for me. I tend to stay with smaller caps, things that move more. Like I'm probably not going to trade Apple, even though it had a huge move, and it would have been great to go beyond that because that 32% for Apple is incredible. It's absolutely incredible. But for the most part, Apple doesn't move much. So for me as a stock trader, it's not something I would go for. What I would like to do, we've been traded Weight Watchers. Weight Watchers was an easy look at that, 44%. So that's more along the lines of what I want to be trading. And I think you just kind of figure out, well, what do you want to do? What kind of trader are you? And what are the parameters of a stock that works for you? And you got to think about your mind, really, your eyes and your mind. What works for you? Because some people can see ranges really well, and they might really like to be a range trader like Rig. Somebody might actually look at this and they just see heaven and paradise. They're like, oh my God, this is great. Look at this. It has been just going sideways here. I can buy and I can sell, and I can buy and I can sell, and I can buy and I can sell. And they are just, in hog heaven. I look at this, I'm like, oh God, that's a nightmare. You know, so yeah, kind of just start thinking about your style and what stocks cater to your style of trading. All right, guys, we're gonna wrap it up there. Let me bring you back over here to Profit Pilot for, God, it's not even Twitter. I keep, lamenting about this, to X. Like, great. What does that even tell you? It tells you nothing. Oh, Elon, I like you, but I don't think this was a good choice. Anyway, that's where you can find me. You can also come over to profitpilot.com or simplertrading.com and check us out over there. For those of you in the Moxie room, I'll be back on the mic in about 30 minutes, and we'll get Sam to kind of do our little chit chat thing, and we'll actually open up the mic this time. So we've been having some fun. Those of you on Facebook and YouTube, another thing we've been working on over at Simpler is doing a little bit more group work. So Sam and I have been kind of overlapping some of our sessions. I know some of our other traders have been overlapping our sessions, and I think it's been kind of fun. We actually, instead of just having to talk and do a monologue for an hour, we actually now have some of our other traders coming in and we can talk with each other, and the subscribers can see what we're up to and what we're talking about. So it's been fun. So come check it out. We got trials. You can do a $7 trial for 30 days and see if you like it, and if Simpler Trading could be a home for you. All right, guys. Thanks again.